So, do you need 20% down when buying a house? That is our question for the week. And I'm ready to continue this kind of series on helping buyers make sure they're positioned to compete in this crazy market with interest rates going up, prices going up, and want to drop some knowledge on this whole conversation of do you need 20% down? So, what's going on, Pete?
What's up, brother? Happy to be here, ready for another good episode. And yeah, that might be the question all year long. We're definitely gearing up for an interesting year, and hopefully we're going to drop some knowledge today that'll help some people out in navigating, having less than 20% down and what you do in that situation.
Yeah, so I mean, I guess diving right into it, I guess the simple way to do this is answer the question as short as you can.
No, you don't. You do not need 20% down. Let's get that out of the way.
Yeah. But I think this is a super common misconception that plenty of people have. And yeah, the short answer is no. But so Pete, talk to me a little bit about what are the different types of loans that are out there, and what kind of down payments are you typically seeing based on those loan types?
Yeah, for sure. So, we kind of call them the big three, right? We've got our three main loan types that we see probably more often than anything else. One is your conventional loan, which is just, not necessarily 20% down, but somewhere usually at least 5% down. And there's some different things that come along with that. There's your FHA loan. FHA loan is a federally insured loan. A lot of people are very familiar with this as having mortgage insurance. And then the third one is a VA loan or a veterans, loan. There is no mortgage insurance and you don't need to put any down payment on this. So we'll dig into those a little bit deeper. So which one do you want to start with? You want to just start with straight up conventional?
Yeah. So conventional loan, you mentioned it, right? That's probably where I think a lot of people get the idea oh, I need 20% down because it's, the conventional loan is 20% down, 80% loan amount. And you're not paying mortgage insurance. And all of those things would be true if that's the kind of loan you're taking out. But Pete, you mentioned that you can go, I think there are actually some lenders that will do 3% programs, conventional, but 5% is usually kind of that threshold that we hear. 5% down, you are going to pay mortgage insurance because you are not at that 20% threshold. But I still think it's a great product, and with rates continuing to be low, I know we've talked about them going up, but with rates low, to me, even if you had 20% down, you might opt to keep some money in the bank, money invested in the markets. I like the idea of keeping some money back. So 5% down and paying a little bit of mortgage insurance, not a bad route for your buyer to go.
Yeah, for sure. And you always want to have a safety net, right? We've talked about that. I think one of the biggest misconceptions with people wanting to go conventional versus FHA is that there is no mortgage insurance conventional. But if it's less than 20% down, you will most likely be paying mortgage insurance. And I also just want to say, guys, this is coming from two realtors, right? So make sure, for the details, and every situation is a little bit different. Your credit, income, all different things go into play. So make sure you really vet out a lender and have these more in detail conversations. But jumping over to FHA, right? FHA, as I mentioned, is a federally insured loan. Almost always has PMI. I think it might always have PMI associated with it. There is some differences. I mean, basically, one of the reasons people go FHA over conventional, even if they do have 5 or 10, or maybe they even have 20% down, but they have different guidelines as far as how much debt to income you can have, what your credit score can be, some things like that. Another little note as far as, PMI goes with FHA loans, you may hear that FHA loans, the PMI never comes off unless you refinance. That's not necessarily true. It's usually 10% down or below. That PMI is on there for the life of the loan. If it's over 10% down, then it's usually about 11 years, and that PMI will come off automatically.
And we said minimum down payment 3.5% on an FHA loan, right?
Correct.
And then we've got our VA loan product, which you mentioned does not carry any kind of mortgage insurance. One of the perks of, big shout out to anyone who's served the country. We appreciate your service. And one of the perks of, being a vet is you have the access to this loan program, VA loan, where you can put 0% down, not have mortgage insurance attached to that loan. And it also, similar to the FHA loan, does have a little bit more flexibility in terms of like, how much you can borrow, and you've just got more flexible terms there in terms of what credit you might need and things like that. So really great program out there for the loan. For the vet looking for a loan would be the VA loan. So now I know we're saying there's some big perks to the FHA and VA, giving access to, home ownership to somebody who doesn't have the big down payment. But Pete, I hear this every once in a while. It's like, can you actually, in this market with things being so competitive, do you stand any chance of actually getting an offer accepted if you're applying for an FHA or a VA loan?
Yeah, so I mean, that's a good question. And just to kind of talk about why a seller might look at an FHA or VA loan differently versus a conventional loan, right? FHA and VA have different guidelines as far as the appraisal process, the condition that home needs to be in. Usually it's like safety issues, loose railings, open gas lines, chipping paint, things like that. So a seller given the option between a conventional loan, which doesn't have a lot of those restrictions, or FHA or a VA loan, yeah, it can be a little challenging. But there are ways to strengthen your offer. If maybe you don't have 20% down. Reality is not a lot of people have 100, 150, $200,000 to put down on a property, right? So let's go over some of those things that you can do to strengthen your offer, right? With FHA and VA. So I'll just kick it off, right? I think the first one and probably the easiest is to have a good lender who's actually going to reach out to the listing agent, communicate the benefits, how qualified your clients are, and having a clean pre-approval, right? We don't want it to look like it was faxed over on a, fax machine from, 1985, something clean, update, and clear.
Yep. And I think, we talk about, how agents communicating leading up to presenting an offer is super important. I love, having the lender contact the listing agent to just share, not only the strength of the buyer, but also to make sure that, as much as we love to think we're sitting here educating buyers, sometimes, quite honestly, listing agents need to be educated on, hey, like, I'm not that familiar with a VA loan program. Like, what are some of the challenges here? Or, should I be concerned? And to have that lender there to answer any questions the agent might have, I think is super helpful.
Not to cut you off, but when everything over the last 2 years, we've seen a lot of new real estate agents enter the industry, which is great, right? There's no issue with that. But you sometimes have agents who aren't as experienced and maybe just heard something and they don't know that it's actually true. So to your point, having a lender go and communicate with them is huge. Can make the difference. It can make the difference.
And there can also be, right, like whether you're brand new in the industry, whether you're a vet in the industry, like sometimes we're humans, right? And maybe you had a bad experience with a client, accepting an offer with a certain program, and you're applying that like stigma to that loan type rather than maybe the issue was with the lender or with the, maybe it was a not great pre-approval. Like, there's so many factors, but sometimes people are people and they get that stuck in their head. Like, oh, here's another, FHA loan. Like, I don't want to deal with the headache on this, So again, that's one big thing. Lender communicating with the listing agent, big way to overcome any kind of obstacles you might face. Another one you mentioned, so like there are certain repairs that might be needed with, a wobbly, railing or some chipping paint. Like, how are we going to overcome that? Because if the conventional loan isn't going to require those repairs, how do we set our buyer apart in that crowd?
Yeah. So, I mean, you always want to try and make it as easy to understand for the seller as possible, right? When you start adding in all these extra things like, oh, well, they might have issues with the paint here or the handrail. So one of the things that you can do is, as a part of your offer, as the buyer, you can agree to either pay for or personally do any issues that come up that would prevent the buyer from getting approved for that loan. Usually put a cap on it just to make sure that you're safe, right? You're not trying to repair a foundation. That's not exactly the same thing. But I've actually had, on one of my listings, I think it was last year, maybe 2 years ago, the buyers actually came out, the paint around the windows was chipping. And we told them, like, listen, we'll accept your offer, but you're going to be responsible for that stuff. They were cool with it. They came out, they scraped and repainted the windows. The appraiser came back out and approved it, and we closed the deal. So it was no issue.
Yeah, and to that point, right, like you can definitely specify that the buyer is going to take on any lender required repairs as part of the loan. And then you still have your rights to your regular home inspection. So if you dealt with big issues, that's where your home inspection can still protect you on that side of things. So I love that as another idea to just kind of set yourself apart and show that, like, hey, like when you're comparing our product, you know, our loan to the conventional loan, we're eliminating that concern over repairs. Any other things that you've done to kind of set yourself apart with a offer that might not seem quite as attractive on face value?
Well, I think, I really think you hit on the head with communication. I think communication is so huge to the agent. You want, remember, you're presenting your offer to the listing agent. The listing agent is then presenting your offer to the seller. You want to have as much communication. Let them know that you're a professional, you're a full-time real estate agent, if you are, of course, and just give them that extra level of confidence so that when they're sitting down with the seller, they can say, you know what, this seller from Pete, or this offer from Pete, or this offer from Scott, I get a good feeling about it. And that's huge. But one last little tip before we're going to make you have to call us to get any more information with VA offers, right? Something that you can do is, although you don't have to put a down payment, it's often sellers get uncomfortable with not having any money as a deposit in escrow while you're going through the process. So I would recommend probably putting, if you can, put $10,000 or however much you anticipate for closing costs. That can stay in the attorney's trust account.
Yep.
And you can then just get that back at closing and use it for your closing costs.
Yeah. Good tip. Puts, that idea of, there being a little bit of skin in the game into the equation, and a good objection handler to that idea of 0% down. So, so I think Pete hit it on the head when he said, there's tons of other ideas that we do, and it's always a case-by-case situation, but that's why you got to give us a call if you're looking to buy a house this year and looking for some extra guidance. So we'll save it till next week, right?
Absolutely. Again, and just to wrap up the point, you don't need 20% down, and there are things that you can do to strengthen your offer if you don't have 20% down.
All right, guys. Till next week.
Later, guys.